exhilarating. You play, you've got over 100 matches. There's actually those technique or two fine shots straight to fielders on the last ball or the last over and the first of this. Really to watch people over 90
Morning, everyone. We're going to go to Unit 2 this morning. Second unit of this course. And we're going to start Unit 2 this morning. You've got the course outline, right? When you get to the course outline, right? You got your course outlines, right? Gentlemen folks, Chantalee, Gutsmuir, or I don't respond now. You got the course outlines, right? You got to access the course outline, right? Now, hear me? Charmaine. Charmaine.
Yes, sir.
You got the course outline, right?
Yes, sir, I did.
Okay, cool. All right, we're going to start Unit 2 this morning now. We're going to look at partnership dissolution. All right. So we're going to start from here. You see the screen, right?
Yes, sir, we're seeing.
Says Rakesh or Mukesh were good friends. They were running a business, a partnership firm. They were very successful. People were jealous of their relation. But one day, people came to know that they have closed the business. Some dispute had arisen between the two on a trivial issue. Similarly, firm may come to an end because of dispute among the partners, or firm running losses for the last few years, or because of order of the court, and so on. You can say that partnership. You can say that the partnership firm is dissolved. In this lesson, you will learn about the accounting treatment in case of dissolution of firm. So these are the objectives for this lesson. State the meaning of dissolution of partnership firm. Distinguish between dissolution of firm, partnership, and dissolution of partnership firm. Explain the realization account and disposal of assets and payment of liabilities. Illustrate the treatment of unrecorded assets and liabilities. And the prepare partner schedule accounts and bank and cash account. First thing, the term dissolution means coming to an end or discontinuation. The dissolution of a firm implies a complete breakdown of the partnership. All right. The dissolution of a firm implies a complete breakdown of the partnership relation among all the partners. Dissolution of the firm, of the partnership, owing to retirement, death, or insolvency of a partner. Dissolution of a partnership merely involves change in the relation of the partners, but it does not end the firm. The partnership would certainly come to an end, but the firm, the reconstituted one, might continue under the same name. So the dissolution of the partnership may or may not include the dissolution of the firm, but the dissolution of the firm necessarily means the dissolution of the partnership. On the dissolution of the firm, the business of the firm ceases to exist, since its affairs would be by selling the assets and by paying the liabilities and discharging the claims of the partners. All right? The dissolution of a partnership among all partners of a firm is called dissolution of the firm. Dissolution by agreement now. A firm is dissolved in case all partners give consent or, as per the terms of the partnership agreement, compulsory dissolution now. A firm is dissolved compulsory in the following cases: when all the partners are excepting one partner becomes insolvent or of unsound mind, when the business becomes unlawful, when all the partners excepting one decide to retire from the firm, when all the partners are all excepting one partner die. A firm is also dissolved compulsory if the partnership deed includes any provision regarding the happening of the following events: expiry of the period for which the firm was formed, completion of specific venture or project for which the firm was formed. They have next one is they have dissolution by notice. In case of a partnership at will, the firm may be dissolved if any one of the partners gives a notice in writing to the other partners. Dissolution by court now. A court may order a partnership firm to be dissolved in the following cases: when a partner becomes unsound mind, when a partner becomes permanently incapable of performing his or her duties as a partner, when a partner deliberately and consistently commits breach of agreements relating to the management of the firm, when a partner's conduct is likely to adversely affect the business of the firm, when a partner transfers his or her interest in the firm to a third party, when the court regards dissolution to be just and equitable. We look at the distinction between dissolution of partnership and dissolution of partnership firm. You have already studied that on the occasion of admission, retirement, and death, this existing partnership comes to an end, but the business of the firm continues under a new agreement. When a firm decides to wind up its business operations under any of the circumstances mentioned, it stands dissolved. Dissolution of a partnership firm is different from the dissolution of a partnership. All right? Dissolution of a firm means that the firm closes its business and comes to an end, while dissolution of a partnership means termination of all the partnership agreement. Go again. Dissolution of a firm means that the firm closes its business and comes to an end. While dissolution of a partnership means termination of an old partnership agreement, and a reconstitution of firm due to admission, retirement, and death of a partner. In dissolution of a partnership, the remaining partners may agree to carry out the business under a new agreement. So we'll look at the treatment of assets and liabilities under the dissolution of a partnership firm.
Sir, what we can see?
Well, you can't see, you're not seeing anything on the screen.
No, that's very fine.
It will fine.
Mm-hmm.
Oh, that goes me
Brown, sir.
eh?
Stash, sir.
Oh, such.
We see you more than or we see something.
You can't see me.
Well, we see a picture.
Oh. Hold on there. You see it now?
No. Yeah.
You'll be a blind bat, you can't see it now. Better?
Mm-hmm.
All right. Treatment of assets and liabilities now. When there's a dissolution for partnership firm. When the partners decide to discontinue the business of a firm, it becomes necessary to settle its accounts. For this purpose, it disposes of all its assets, so cash and bank balances, for satisfying all the claims against it. For this purpose, a separate account called realization account is opened. Realization is an account in which assets excluding cash in hand and bank are transferred at their book value, and all external liabilities are transferred at their book value. Right? Well, again, when the partner decides to discontinue the business of the firm, it becomes necessary to settle its accounts. For this purpose, it disposes of all its assets, exception bank, for satisfying all the claims against, meaning liabilities. For this purpose, a separate account called realization account is open. Realization is an account in which assets excluding cash in hand and bank are transferred at their book value, and all external liabilities are transferred at their book value. It also shows what amount were realized on the sale of assets and which liabilities are discharged at what amount. In order to record disposal of assets and discharge of liabilities, the following journal entries are recorded. For transfer of assets now, assets account is disclosed by transferring it to the realization account at its book value, debit realization account, and make a credit to the assets account individually. It is to be noted that following that following it is to be noted that the following items on the assets side of the balance sheet are not transferred to the realization account. Undistributed loss, that is debit balance of profits and loss account. Fictitious assets are deferred revenue expenditures such as preliminary expenses. These are not transferred, right? All the above items are closed by transferring them to the partner's capital account in their profit sharing ratio. All right? The journal entry is made like this: debit partner's capital account individually, and then credit profit and loss account and credit fictitious account as well. All right? Transfer of loss and fictitious assets. Cash in and cash at bank now will be the opening balance of the cash at bank account. All right? Provisions and reserves against assets should be closed by crediting the realization account. For these statement a while ago, the journal entry for this provision and reserves, debit provision for doubtful debts, debit provision for depreciation, and then you debit any other provision as well, and credit realization account. Right? So far, we have looked at what? Transfers of assets as it relates to the dissolution of a partnership firm. Now we look at now transfer of liabilities. For the transfer of liabilities now, the accounts of various external liabilities are closed by transferring the so for the liabilities now, the accounts of various external liabilities are closed by transferring them to the realization account. The loan given to the firm by a partner's wife treated as an external liability and is transferred to the credit of the realization account. The relevant journal is as follows. Debit external liability and credit realization account. Okay. Capital and loan account of the partners are treated separately and so are not transferred to the realization account. Right? It's different from loan from a wife. We look at now treatment of accumulated reserves and profit or loss. Any balance of accumulated reserves, for example, general reserves, profit and loss account, reserve fund, and other reserves on the date of dissolution will be credited to the partner's capital accounts on the basis of the profit sharing ratio. Right. Following journal entry will be recorded. Debit profit and loss, credit general reserve, and debit any other fund, and then you will then credit the partner's capital account individually. This is transfer of profit and reserve. So that was for transfer of what? Treatment of accumulated reserves and profits. And we did also transfer of liabilities, right? When you're going through different questions, You have to read back through these notes to guide you. Right? All right. So look at treatment for sale of assets for cash. All right. As a sale of assets for cash now, you would debit bank with the realized value, and then you would credit the realization account. That's how you treat sale of assets for cash when the dissolution of a partnership. For right? When there's a dissolution of a partnership for next one look at now is for assets taken over by the partner. In this case, now you debit the partner's capital account and credit realization account at the agreed price. And this is for assets taken over by a partner. You'd also debit bank or cash or other partner's capital account, and then you would credit to the partner's loan account, settlement of loan partner. Next, look at settlement of loans given by the partner. All right. In this case now, you debit the partner's loan account. Then you would credit entry to the bank, cash, or partner's capital account, depends on where the money is coming from. So you may make a credit to the partner's capital account, all right? Settlement of loan given by the partner. So it will be the debit the partner's loan account and credit the bank account. Right? Payment of liabilities in cash now. Debit realization account and credit cash account. Payment of liabilities. So I'm illegal, man. You migrate. So I'm just turn. All right. So look at now payment of liabilities by the partners now. Debit realization account, and then you what? Credit the partner's capital account. Liabilities taken over by a partner. Shipment of unrecorded assets and liabilities now. Shipment of unrecorded assets and liabilities. Treatment of unrecorded assets and liabilities. Sometimes there may be some assets that have already been written off completely in previous years and thus do not appear in the balance sheet, but physically they still exist for operations. Sorry, for operational purposes. So, for example, There's an old computer which is still in working condition, though its book value is 0. Similarly, there may be some liabilities which do not appear in the balance sheet. All right? But actually, they are still there. For example, a bill discounted with bank on dissolution. On dissolution, it was dishonored and had to be taken up by the firm for payment purposes. It is to be kept in mind that an unrecorded asset will never be transferred to the debit of the realization account, because the amount realized from its sale is in nature of a gain, and the realization account is only credited accordingly. Similarly, an unrecorded liability need not to be transferred to the realization account. The reason being that its payment is a loss, and realization account is only debited with the actual payment. In such cases, the following journal entries are made. When the amount realized from the sale of an unrecorded asset now, debit cash or bank, and the credit realization account. Sale of unrecorded assets, no? Yeah. When an unrecorded asset is taken over by a partner at an agreed value, you debit the partner's capital account and credit the realization account. Unrecorded assets taken by a partner. Next one. When unrecorded liability has been discharged by the firm, when unrecorded liability has been discharged by the firm, debit realization account, credit to the bank or cash account, and they have payment of unrecorded liabilities. All right. When the unrecorded liability is discharged by a partner on behalf of the firm, debit realization account and credit to the partner's capital account. All right. Our time is will expire, but in this case, we don't need to resume because class ends at 8:50 or 9:50 actually. So when the time expires, class ends at that time, all right? When the time expires at this. All right. So the only time realization is done is when the only time the realization account is affected, that is when the actual sale has been made or money has been exchanged. We look at payment of realization expenses now. When realization expenses are paid by the firm, when realization expenses are paid by the firm, that is borne by the firm, the following journal entry will be recorded: debit realization account, credit the bank or cash account. When realization expenses are paid by the partner on behalf of the firm, that is realization expenses paid by the partner but borne by the firm. the following journal entries made: debit realization account and credit partners capital account. Payment of realization expenses by partner on behalf of the firm. So again, when realization expenses are paid by the partner on behalf of the firm, journal entries, journal entries made: debit realization account and credit partners capital account. Payment of realization expenses by partner on behalf of the firm. Realization expenses now paid by the partner and borne by the partner. In this case, now you do what? Debit the partner's capital account and not credit cash or bank account. Realization expenses paid and borne by the partner. And then closing of realization account now. The closing balance, the balance in the realization account would show either profit or loss on dissolution. If the total of the credit side is more than the debit side, then there's a profit. This is for realization, please. And the following journal entry is made. Again, the balance in the realization account would show either profit or loss on dissolution. If the total of the credit side is more than the debit side, then there's a profit, and the following journal entry is made. Debit realization account, and then you what? Credit partners capital account individually. Profit and realization transfer to the capital accounts. If the debit side is more than the credit side, then there's a loss on dissolution. And the following journal entry is made: debit capital partners capital account or current account, and then you want credit realization account. Loss on realization transfer to the capital account. Now let's look at the format of the realization account. Now you must make note of this in your book, please. And you must write it down, please. So this is the format. So all assets account or book value are recorded on this side. All external liabilities account at book value are recorded on this side. Cash or bank payment of external liabilities. Partners to account if any liability paid by the partner. Cash or expenses and realization. Partners to account expenses and realization paid by a partner. Partners to account for transferring profit and realization. This is the part. Then now you have amount realized on sale of various assets. Partners, if an asset is taken over the account for transferring loss on realization. So when you can write this off, please. This format, please. Please write this down. So you can get some more able to see. That's the realization account there. Format for it. All right, get the picture. Let's move on if you want to. All right, look at the partner's capital account and cash at cash or bank account now. Settlement of partners' capital accounts. After all the adjustments related to partners' capital accounts and transfer of profit or loss on realization and the partners' capital accounts, the capital accounts are closed on in the following manner. If the partner's capital account shows a debit balance, the partner is to bring necessary amount of cash. The following journal entry is made. Debit bank or cash, and then you what? Credit partners capital account. All right. Cash brought by the partner. If the partner's capital account shows a credit balance, he or she is to be paid off the necessary amount of money. Following journal entry will be made. Debit partner's capital account, and your credit bank or cash account. Right? The partner's capital account was a credit balance, he or she is to be paid off necessary amount of money. The following journal entry will be made. Debit partner's capital account, and credit to the bank or cash account. Cash paid to partner. All right. We're going to stop there for today because we have less than a minute left to go. And then next class we pick up from where we left off. I'll be emailing these documents to you right away. Or some documents, I'm going to email them to you right away. Plus, I'm going to upload them on iSIMS as well today. So you can get them. Everything that I've taught you so far. I might just email to you everything in the that I've prepared already for the course. All right. Thank you very much for participating. And as said before, that this was recorded